Is your lending business leaving money on the table? The answer is probably yes. That's because traditional underwriting can miss many deserving borrowers. It uses only a handful of data points, 50 or even fewer, to produce credit decisions. But a lot more data is available to help you make informed credit decisions about the millions of millennials and other underserved consumers around the world. How do you make sense of all that data? Machine learning. Machine learning can provide accurate, predictive analysis based on thousands of data points. Within seconds, you can make solid credit decisions about thin-file borrowers, the ones that traditional underwriting models can't serve. But if that's the case, why has machine learning so far had little impact on underwriting? For one, machine learning models have historically been black boxes. It can be nearly impossible to get full visibility into how those models work. And time is money. It takes a lot of both to transition from traditional to machine learning underwriting. We know. We built our own machine learning underwriting technology. We've been using and refining it for years. And now we're making it available to lenders around the world with the Zaml platform. Zaml is an end-to-end credit underwriting platform for lenders looking to leverage machine learning. With Zaml, you can quickly discover, acquire, and onboard data sources. You can then work with that data to develop machine learning models in our data science environment. And you can put your model into production within minutes. Want to get clarity around how your model outcomes are produced? Our explainability tools crack open that black box. You can easily convey the model's economic value to executives, or perform due diligence required for compliance. And if you ever need help, tap into Zest Finance's deep knowledge from years of using machine learning and big data to make credit decisions. Our skilled professionals are with you every step of the way. Machine learning is the future of lending, and you can be a part of it with Zaml. Stop leaving money on the table. Visit us at zestfinance.com to request a demo and learn more about what the Zaml platform can do for you.
Assalamualaikum and hi everyone. My name is Nur Fatin Farin binti Mas Azmi, and today I would like to share about an AI product in banking system produced by Zest Finance called Zaml. First and foremost, let me tell you a little bit about Zest Finance. Zest Finance, or now known as Zest Ai, was founded in 2009 by Meryl, the former CIO of Google, and a team of former Google employees with the mission of making fair and transparent credit available to everyone. It began as a lender but pivoted into modeling, applying AI to develop accurate and explainable credit risk models. Zaml, or Zest Automated Machine Learning, is one of the company products. Zaml enables lenders to analyze vast amounts of non-traditional credit data to increase approval rates and reduce the risk of credit decisions, particularly for thin-file and no-file borrowers like millennials. The platform also provides the ability to explain data modeling results to measure business impact and comply with regulatory requirements. Zaml uses machine learning to analyze tens of thousands of non-traditional and traditional variables to more accurately score borrowers, including thin-file and no-file borrowers. Zaml can analyze vast amounts of data they already have in-house, such as customer support data, payment histories, and purchase transactions. The platform can also add traditional credit information and non-traditional credit variables. There are a few users of Zaml. Firstly is Baidu. Baidu actually invests in Zest Finance, and they use Zest Finance technology to develop a credit scoring platform based on its search data. Secondly is Microsoft, where the alliance allowed Zest Finance to furnish a fully explainable AI solution built on Microsoft Azure and machine learning server platform. Next is MeridiaLink, where they will be integrating Zaml credit scoring directly to its Loan PQ platform, providing MeridiaLink clients the ability to access advanced machine learning for lending. Lastly is Discover Financial Services. Discover will be using Zaml platform to improve their credit underwriting. One of the subsidiary product in Zaml is Zaml Fair that was released last year. It is mainly used for house mortgage. Zaml Fair, which is built into Zest Finance's main Zaml platform, ranks credit signal by how much they lead to buyer's outcome. It will then automatically create a new model that has more fairness attached to it. Lenders can choose to minimize the impact of certain discriminatory factors have on determining if a borrower is creditworthy, including income and traditional credit score. Before continuing, let me tell you a little bit about the reason for the creation of Zaml Fair. There was a study conducted by WNC, the National Public Radio member, the Center for Investigative Reporting's Reveal Show, and the Associated Press recently teamed up to study millions of home mortgage disclosure Act record and found African Americans and Latinos are denied conventional mortgage loans at a rate that in some cases are much higher than what their white neighbors are given. The study found that across 61 cities in US, disparities are particularly bad. Individuals applying for mortgage in rural areas were denied more often than those looking to purchase a home in an urban area. With the mission to make fair and transparent credit available to everyone, Zest Finance produced the product. Mr. Merrill also said in an interview that people should be treated fairly, but until now there was no way for banks to do the right thing because they couldn't understand their own models well enough to know what variables, if any, cause discrimination. Other than that, models are by nature very biased, and the ability to make decisions that are biased is an epidemic. So, how does actually Zaml Fair works? Zaml Fair is a new algorithm that lenders such as banks and more can apply to an existing credit model to tune down the impact of discriminatory credit data. Zaml Fair uses the transparency tools built into Zaml to rank a model's credit variables, including income and credit score, by how much they lead to buyer's outcomes, and then carefully mutes the influence of those signals to produce a better model in a fraction of the time and effort required by legacy techniques. Tools give them ability to remove variables and at the same time gauge how it will impact the portfolio. As a result, the clients actually achieve 15% increase in approval rates with no added risk and 30% reduction in losses, keeping approval rate. Furthermore, lenders can easily approve borrowers with limited credit history, in some cases by 5 times. Lastly, lenders manage to shrink the gap in approval rates between white and minority borrowers by 30%. In the current world situation, more AI products are meant to be created as the world is getting advanced day by day, and our daily life is getting easier. In a conclusion, Zaml helps make better decisions and better loans, increasing revenue, reducing risk, and automating compliance.